Hello, retail traders. I'm Washboardjim with a sneaky snake trading strategy, and I've been catching great knives on this pullback. Patience, been stuck in a couple of trades and took the loss, but I know when I'm in a tough trade, so I always go in smaller than usual, unless I think we have a possibility of a rebound. But I'm one of the best knife catchers out there. I built a strategy on that. It's called the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And we're going to talk about a chart pattern where you can find a resistance and a support off of. So let's get right to it. It's called, this is my cheat sheet. Type in bullish, Google bullish, bearish chart patterns, reversals, and you'll see a bunch of different diagrams. You're welcome to copy and paste this one. This is the one I used when I first started trading. Now they're all memorized. 16 patterns plus one more, and that's called the megaphone expansion pattern. Each one of these are bullish and bearish. You know, I built the strategy where you just have like a big old knife coming down, and then you try to look for patterns after that knife. You try to look for the breakouts. You study the candlesticks, and that candlesticks alone can give you an idea if a stock's going to break out or not. And I talk about it every day after a knife. I get caught in a few trades. Who doesn't? But I have one heck of an accuracy level. And it's hard for people to understand sometimes, but I prove it every day live on YouTube and in the room. So we have continuation downtrends. A lot of them are descending bearish flag. A lot of people think this is a bullish flag. No. I mean, it can be if we're at the bottom of the day and we've had nothing but a sell-off all day. But no, that's bearish. That's bearish, a rising wedge. We have rising wedge breakouts. So here lately, we have we have symmetrical flag. Then on the continuation pattern, at the bottom, we have what you call an ascending triangle, one of my favorites. I see that more on bullish days, on when the market's normal. And then if I see them they don't come up much on when we're bear, but when they start to show up, then you get some kind of idea that we might be hitting the bottom. If you see them more continuously. Then we have the famous bull flag, which a lot of people think it's a bear flag, but it's a bull flag. It's consolidating. And then we've got the bullish wedge, a falling wedge. I call this a symmetrical flag. Same as right down here. There's no difference. Maybe this has a deeper arch, and these are equal, but they're both the same. Then we have what you call a head and shoulders, which is a bear flag. We have a rising wedge, which is a bear flag. We have a double top. And we have a triple top. See, this one here, somehow I got to looking at these two. This is a bearish wedge, and this is a rising wedge. So they're both the same thing. This one here arches up. This one spits out. Which sometimes you could get another breakout on a symmetrical flag. So I think that's more of a symmetrical flag than a rising wedge. This is a rising wedge. Then we've got the triple top. Then we've got this one of my favorite. All four of these flags are the ones that I'm seeing now, plus the megaphone. All of them are great flags. These are more bullish than these by far. This one's a good one. But this is called an inverse head and shoulders. I plot this out every day. If you want to learn how to trade a head and shoulders and become a winner, follow me on YouTube. We have the falling wedge is another one I call out, double bottom and triple bottom, and then the expansion pattern. So copy and paste this, use it as a cheat sheet, and always use the images on Google when you charting these things up, like type in falling wedge and look at them diagrams. Study them. You'll see how often they pop up. So today I'm going to be talking about IWM. Now, as you can see, I've charted this out already. And what we're going to do is we're going to look at a couple time frames. I want to show you something that can tell you maybe that we're in a bullish market or bearish market. And when to expect a reversal. Belch. So I'm going to erase everything on here. It's all about the head and shoulders and the inverse head and shoulders. Just two of the opposite. Two of the opposite. So we're going to go straight to a yearly time frame. Yearly candlestick. 20 years. I'm going to show you something on this here IWM that can tell you to be a little careful that we could have a pullback or a consolidated year. It's just natural. It has nothing to do with today's events. It has nothing to do with who's president. It has everything to do with technical analysis on a chart. The fundamental traders were pumping this market up. They thought we were going to have a huge breakout, pumping all these tech stocks up, and they've all pulled back. Well, there's a special reason for that. These are called soldiers. These are called crows. So we had 2 soldiers and a crow, consolidated year. 3 soldiers and a crow, consolidated year. 2 soldiers and a crow, consolidated year. And then it came a triple bottom. See? 1 bus, 2 bus, 3 bus on the bodies. Then we had 3 white soldiers. Consolidated year. 3 white soldiers. What's going to happen? We got Trump as president. He's one of the most business presidents I've seen in a very long time. Ever, actually. So we're in a civil war between MAGA and the liberals. I hate to say that, but that's just what it is. So they've been batting off right and left about how much they hate Trump, which gives it momentum to have a reversal in this market, no matter what. We've already had the 3 white soldiers, means we're bound for a reversal anyway. So they know this. They're not telling you this. So they do expect us to have a consolidated year, and they're going to make the best of it. Don't follow the media. Be the devil's advocate. That's why I listen to CNBC and Schwab, because I'm the devil's advocate. When they're pumping these stocks up, I'm ready to short them. Period. And I've proven that to be right, if you listen to me day after day after day. So this is to be, no matter how you look at it, at the IWM. So now you take it to the weekly time. Even let's look at the monthly, 15-year monthly. See, we had kind of a pullback to this previous support level right here. I need to bring this up just a little bit, and it looks like we might have hit it. And that there is an equilibrium. You got a top here off of a wick. You got a tweezer top here. And you've got support. What was resistance, this is a monthly time frame. Each one of these candles represent a 1-month period. So right now we're standing above the 9 EMA on the monthly time frame. This is my 9 and 21 EMA cloud that I'm learning how to start to trade with, thanks to a friend of mine called Funky. He's a real good trader. He's a scrapper. He's learning how to trade. He hasn't got it down yet, but he's starting to feel it. And he studies real hard, harder than anybody I've ever seen study the market. Once he gets out of them little fear of the market, he's going to be a real good trader. But I'm fearless. So we had a triple top breakout. It pulled back to the triple top. 1, 2, 3. Everything's in threes. It's real simple. I teach dummies how to trade. I wrote the book on teaching dummies how to trade, make it as simple as I could. And I'm a dummy, so I had to make the strategy to fit me. So I admit it. So that's the monthly. Then we've got the weekly. So we pulled back to support on the monthly. Then we have the weekly here. Now, this is the first pattern I see. That's called a head and shoulders. So what I'm going to do is take a price line, a trend line, like that right there, and I'm going to come off the body of that candle right there to that left shoulder, and I'm going to hit the right shoulder body of the candle right here. Right to support. See, we pulled back right to support. This is called a shoulder line. As you went up, we had the double top breakout, and it pulled back to that shoulder line. That found support off that head and shoulders. You extend that out, and we found support again off that shoulder line. You see what I'm saying? So the possibility of this war ending soon and we consolidating could be a good support level. We closed up with a hard money or a tweezer bottom. Actually, a hard money. Inside candle of the previous candle. And we have an inverted candle hammer right here, which is the first sign of bullishness. See how we bounced over here? We bounced off of a long leg doji after 3 black crows. My strategy is all about chart patterns, moving averages, and being in the now. I'm in the now. I have a feeling this war is going to be over with a lot sooner than most people think. It won't carry on. This is just not about Iran. This is about freedom, democracy. Iran used to be a democracy, and then it got took over. They've been a terrorist group for 50 years. It's time for it to stop. We have the ability to stop it, and I'm all for it. So after that's all over with and we come to some kind of settlement or truce or ceasefire, this market's going to bounce like everything. Last week I caught 2 knives. Within 2 to 3 minutes, I had 150% trades, 200% trades, just on a tweet. But I'm buying them at support. I'm recognizing chart patterns, moving averages, and being in the now. As we approach, right now we're still bullish because we're above all the moving averages. We're bullish because we held above that inverse head and shoulder, or that head and shoulders, and we retested that shoulder again. So this is an inverted hammer. This is bullish. It's a hard money. So what we're going to do, I think, consolidate and then move up. But I don't know. You know, it depends on what events take place. So I wouldn't be swinging yet. I'd be scalping. I'm buying the bottoms. I mean, I'm having a heck of a time. A lot of people are scared. It's common to have pullbacks no matter what. We're overextended. We were way overbought. We needed some kind of consolidation. You just can't keep going and not consolidate. And one of my biggest chart patterns that I'm showing you on that sheet, and then plus the 3 black crows and the 3 white soldiers, I mean, I'm making money because I'm recognizing the 3 black crows. These are in weekly time frames. I'm recognizing the right shoulder of this head and shoulders that we touched it once, and we got to watch these candles and see how they turn out. I get a better idea when I'm looking at the daily. So we're going to look And then let's finish this chart up. So we have an inverse head and shoulders right down here. I have actually two of them. And I'm going to kind of draw these out and show them to you what they look like. And make supports out of them. So I take the body of that candle right there and I move it to that. That's the worst scenario. That's the Biden scenario. We pulled back during that one part of that, after Trump got elected. It was going to happen anyway. It was bound to happen because we hit that shoulder line. It was going to happen. And then we bounced up off the inverse head and shoulders. And then I'm going to take this line and I'm going to draw it up to this next line right here, this other head and shoulders. Now I got a two-headed snake. The next support would be at 213. That's the 100, the 200 EMA on the weekly. So we're at a solid support. The moving averages come in place next. If we cannot hold this support level. I'm pretty strong about this support. It's a hard support. And that means when I say hard, that means your odds of bouncing are a lot better than it dipping below it. So now I take it to the yearly. And we're bouncing off the 200 SMA. The 200 SMA is a technical indicator by the institutional traders. They buy and sell off the 200 SMA on the daily time frame. They're looking at this trade now to go long. We have a double bottom off the 200 SMA. It's another solid support. So I've got the head and shoulders support. I've got the 200 SMA on the yearly support. And I'm going to take this to a different time frame. So I'm bullish by zooming out to the yearly. I'm bearish. To the monthly, I'm bullish, short term. To the weekly, I'm bullish. And to the yearly, I'm bullish. So I got 3 reasons out of 4 to take that trade. And then I'm going to take this to the 1 hour. So I got a head and shoulders at the 1 hour. 4 reasons to take this trade. Or it comes down and we buy the bounce. If this thing dips on down, we take the double bottom on the 90-day, 1 hour time frame. Then I take it to the 20-day, 1 hour time frame. Another head and shoulders. You got a head and shoulders, you got a shoulder line here and a shoulder line here. You got a shoulder line here, a shoulder line here, and we're real close to support. So I got 5 reasons out of 6 to take this trade. Then I go to the 5-minute, 5-day. The only way I'll take this trade on the 5-minute, 5-day is if we break, or I'll run it up to the 100. That was the previous resistance on the 5-minute time frame. Let me see if I can get a different chart up here. There we go. So 5 days ago, we had a bottom down here. 5 days ago. So that can easily come down here and find support. And it's a higher low. So I want to take my trend line, go to the body here. I want to take that body and run it up to that body. There you go. We're at a solid, we're bearish because we're still under it. So we still got to break above that trend line. And then that 100 has been resistance. So you either take it to the 100 EMA, or you wait till it hits the 100, pulls back a little bit, and then breaks it and runs it up, and you run it up to 245 or something. Run it up to this triple bottom, quad bottom. Like I said before, over and over and over again. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. 1, 2, 3, 4. Didn't bounce up. It didn't bounce up. 1, 2, 3, 4. Then on the 5th time, it bounced up a little bit. But we got to break that 100 EMA before we start to get any momentum, or we run it up to the 100 EMA and get out of the trade and wait for that thing to break and get the scalp on the pullback. But that's going to be your hard resistance for right now. It might even shoot up to 245. And if we get real good news, this thing will be back up here to 250 before you know it. Probably in a single day. You've got to be glued into this market right now. I'm more excited than I've ever been. I get like this when I'm at a bottom. I've got like this in 2022. I got like this when Trump had his little pullback on the yearly, and we hit that, come close to hitting that 200. And I'm in the same kind of mood right now. I think what's going to happen is in the next 5 to 10 years is going to bring peace to the whole world. Iran's been nothing but a thorn of terror for years. So that's it. Just a good way of charting them up. Head and shoulders, shoulder line. Once you break the shoulder, it always comes back and tests that shoulder. So, and then you had the 3 black crows, which is one of my staple trades. 3 black crows, boom. 3 black crows, long leg doji, boom. 3 black crows, one of my favorite patterns. So I'm Washboard Jim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Look for them head and shoulders and them inverse head and shoulders and them triple bottoms and them falling wedges and them double bottoms and rising wedges. I mean, we could really have a good time. And expansion patterns. Adios.